The end of July saw earnings in Exxonmobil that beat expectations, but the stock is still under pressure since then and has slipped to its lowest levels since February of this year. Of course, we can't ignore what's going on with the oil price. So is this a buying opportunity, or are we set to see Exxon slide even further? I thought it'd be interesting to do an update on Exxonmobil. We had those earnings out at the end of July and they were ahead of expectations. I'll talk about them a bit more in a second. But of course, if you follow Exxonmobil, you probably have an eye on the oil price as well. And the oil price has slid quite a bit over recent weeks. And of course, as an oil company, that is going to affect the stock price of Exxonmobil. So as usual in this video, I'll talk a bit about the recent news around the company, those earnings and the oil price. Then we'll come back onto this and see, is there an opportunity here and where might the slide stop? Hello, I'm David Jones from Capital.com, and I thought we'd take a look, do an update on Exxonmobil. Given what's going on in the oil market, we've seen a big sell-off in oil over the last few weeks, and also because Exxon has recently had its earnings out. So as usual in this video, I'll talk about the recent news. We'll look at the levels to watch from a chart point of view. Then we'll jump back onto the trading platform and look at the charts and the technicals in a bit more detail. As usual, if you're watching this and you haven't subscribed, if you could click on subscribe. We do push out 3 videos every week on different US stocks. If you're subscribed with the alarm bell notification pushed, you get a notification off YouTube every time we put up a new stock video. Right, let's get into it and take a look at Exxonmobil in a bit more detail. So a bit of history. The company was formed in 1999, the company as we know it today, by the merger of 2 oil giants, Exxon and Mobil, not surprisingly, to create what is now the world's second largest oil company by market capitalization, so by how much the company is worth. We had second quarter earnings out recently at the end of July. These came in, the company earned 110 cents per share in its second quarter. This was slightly ahead of expectations of around 99 cents per share, and revenue as well was ahead of expectations. So on the face of it, those earnings were positive, but we haven't really seen the reaction in the share price. The share price is still under pressure. Of course, over the last year or so, the rising price of oil has helped oil companies, and we saw the price of oil hit 2.5-year highs in July of this year. So everything was rosy from an oil point of view, but we have seen the price of oil hit hard over the last month or so. It's down by about 20% off those highs. So that understandably is going to translate through to oil companies and is one of the reasons that we're seeing the stock price of Exxonmobil under some pressure. Despite this, the stock is still up by 25% for the year to date, so that's a good performance. But again, not surprising, consider the falling oil. It's down, the stock is down 20% from the June highs. So what does this all mean? If we see further pressure on the oil price, are we going to see these oil stocks slide? Or actually, is this weakness a buying opportunity? We'll take a look at the charts in a second. First of all, let's talk about the big levels to watch. So I suppose from a support and resistance point of view, we've got 2 fairly close levels to watch. The high from earlier in August or the end of July coming in ahead of $60 for the stock. And on the downside, I suppose we could look at $50 as something of a psychological level. After that, we'll be looking back to actually February lows, just below $49. So there is some potential support coming in not too far away from where the stock is now. As usual, though, let's put some color on these numbers. Let's jump onto the platform, look at the charts, and see if there's a trend. So I thought we'd start things off with a moving average, as usual. So this is a 20-day moving average, so the average price for the last 20 days. The classic way of using moving averages when the price moves above the moving average, like, for example, in January of this year. This is a buy signal for those using moving average crossovers and is a suggestion that perhaps a new trend is underway, up. And then if we jump forwards to the beginning of July, when the price fell below the moving average, around 62.50 for the stock, it's a suggestion that perhaps the trend is reversing, that uptrend is changing, and we're going to go into a downtrend. And that has been the case since July. We did have this brief period here middle of August, when the stock blipped above the moving average, but it's fallen back below. The last signal we had was a sell signal on the fall through 57.50 in the middle of August. So that the stock price, according to the moving average, is still weak, and it is being borne out by what the price is doing. You know, we're now back to levels not seen since about the third week of February, so the stock clearly is still under some pressure. If we take a look at the RSI down here, this is an overbought, oversold signal. It can be a suggestion when the price has gone too far in one direction. It's oversold again. You know, the last time it was oversold was here, middle of July. We did get a bounce. We got a bounce of about $5 for the stock from there. So again, you know, in the short term, perhaps it won't be too surprising to see something of a small recovery from here. But I don't think it changes the pressure that is on the stock at the moment. Let's take a look at some of the trends. So right up until June, the stock had been in an uptrend. We had higher highs, higher lows. Exxonmobil stock traded almost to $65 on the 25th of June. And since then, of course, we've seen a shift in trend. We've broken some big support levels on the way down. I think these levels here were important. March lows around 54.40. And we can see it did hold in third week of July. But we've broken below over the last couple of days. So some would view that as a potentially negative sign, and that we're starting a new trend now, or in a new downtrend that looks something like this, where we have lower highs and lower lows over the last 6 to 7 weeks or so. When it comes to levels to watch for potential support, I think $50 could be one, because it's a psychological level. Perhaps more importantly is the level just before it started breaking higher in Feb. That's coming in around 48.70, that sort of area. After that, be looking at the early Feb lows around about 44.20. So for now, at least, the stock is still under some pressure. The RSI is oversold, suggesting we could get a short-term bounce. But that trend line is coming in, where is it? Around about $57, and we have the old highs coming in at 59.50, that sort of area. So I think it would require strength through that 57 to 59.50 area to suggest this weakness at the moment is running out of steam. So if we're expecting this new downtrend to continue, any strength from here, assuming it can't crack 59.50, remains something of a selling opportunity. So for now, the stock is still under pressure. Let's see how it performs around the old sort of 47, 48 to 50 support zone. But don't be surprised if we see rallies running out of steam and the stock turning lower. That's it for this update in Exxonmobil. Pretty weak at the moment. We'll see how it performs around 50 in the days and the weeks to come. We'll come back and do an update and see what the next few weeks look like. But for now, from me, David Jones and Capital.com, we'll leave things there. Good luck with your investing. For more trading videos just like this, please subscribe to our channel.